Hey, everybody. Welcome to the webinar. Just give me 1 second. I'm going to see if I can go live on Instagram too. It doesn't always work right away. And it's not working. Oh, well, that's totally fine. We'll be over here on YouTube. There's more people here anyway. So welcome to tonight's Upsolve webinar, everybody. I'm really excited to bring with me Gordon Oliver. Gordon is a friend of mine, and he is also just an absolute genius level expert at debt management plans, which is something that we talk about at Upsolve often. I'm feeding back into my own ear. Hold on 1 second. I'm going to mute this. There we go. Perfect. And hey, we're also live on Instagram now. The world is working how it should. So really excited to have Gordon with tonight for this really important conversation. I've been talking a lot on our podcast. I've been talking to a lot of you offline about debt management plans, what they are, when they work well for you, when to choose them versus bankruptcy or debt settlement. And I can't think of anybody better to talk to about this than Gordon. So if you are interested in debt management plans or just have questions, you are in the right place. As always, open to questions. You can throw them in the chat at any point in time. We'll see them. We'll answer them as they come up. Also have some questions coming in from other channels. So if you're on YouTube and you don't see them, or Instagram and you don't see them, they probably came from somewhere else. So a little bit of background before we jump into Gordon's story. I've mentioned this to you all before on some of our videos, but I know firsthand how overwhelming debt can feel. 9 years ago, I was navigating my own financial struggles. I had $60,000 in credit card debt, and it was through talking to experts like Gordon, doing research online, that I found Chapter 7 Bankruptcy, which helped me break free and start to rebuild my life. Gave me a path forward. And that's honestly why I host these webinars, right? Like I want to be able to empower you all to take control of your own financial futures, which is why Gordon is here tonight. Absolutely honored to have him. Gordon, it is a thrill. I'm going to give your potted bio. Tell me if any of this is no longer true. But Gordon is the Director of Business Development at Cambridge Credit Counseling, which is a trusted nonprofit that helps people achieve financial stability. And they've been doing it since 1996, right?
That's correct.
Amazing. Wow. That is a long time in the game. So Gordon has over a decade of experience. He has dedicated his career to empowering people through financial education, debt counseling, and practical solutions. He also hosts it was previously called Financial Wellness Today. Is that still the name?
That's the name, correct. It used to be the Cambridge Connection.
Okay, cool.
Yeah.
He hosts the podcast where he shares really valuable insights on personal finance and debt management generally. All right, I'm going to shut up now. Gordon, welcome to the show. Tell us a little bit about what inspired you to do this sort of work and to dedicate your career to helping people manage their debt.
Yeah, Ben, thank you for that tremendous introduction. And you and I work very closely in such an important piece of a consumer's way of life, right? That's financial wellness. That's the reason we changed the name of the podcast, because in today's day and age, the economy hasn't been great. COVID was a whole time frame where things kind of changed the way we do everything, right? And then as we come out of that, the economy gets bad. But to your question, our CEO and president, he and I had been childhood friends. And when he was starting to become a financial counselor in the business, he had actually called me and kind of recruited me because he knows where my heart's at. He knows how I like to do business. And together we just worked on helping people figure out how to deal with financial difficulties. And throughout all of our time in the business, there have been ups, downs, lefts and rights economically, but there is never not a need for someone somewhere to have a trusted place to go to get assistance.
No, it is kind of amazing. It's every time I talk to somebody who telling my story or telling the story of somebody else, I hear, oh yeah, I filed bankruptcy, or I helped my parents with the debt management plan, or like my cousin's currently enrolled in one. It is really amazing how much our finances are a struggle for so many people, and also how often we don't talk about it. I don't know if that's something you encounter in your work as well.
100%, because life is a journey in all ways, not just financially, but mentally, physically, goods, bads, indifference. But if you think about the reality of it, you don't become an expert in martial arts in 1 week, right? You have to go years of practice and dedication and work to become a master of martial arts. And I think the financial journey is always needing work. It's always an opportunity to learn as you go along. Things change in your life sometimes. My personal story, in the midst of working here, I got divorced. And I can very, very confidently say that hurt me tremendously financially to go through that.
Yeah.
However, when we talk about relationships and habits and all the things about a quality of life, I can also report that my children's mother, we are great friends. We raised our kids. We barbecued together. We showed up
Good for you.
at soccer games and
Yeah.
whatnot. So, there's always ways. Sometimes darkness shows up, but there's always way out of it. And we're so attached. We go to work every day to make money. So we have to learn that that's an important piece of our quality of life. And that's why you and I coming together and doing the work that we're doing has just been a godsend.
Yeah. So for those who don't know, the way that Gordon and I work together, Upsolve has about 3 million people a year that come to our website that are looking for some kind of help. Most of our articles online are about bankruptcy, and Upsolve's primary service is bankruptcy. Bankruptcy isn't for everybody, right? Sometimes there are other debt relief options that are a better fit. And one of the ones that I believe most in is a debt management plan. So, Gordon, can you tell us a little bit about how bankruptcy and debt management are different?
Yeah. In simplistic terms, first of all, we start as a counseling session, a debt counseling session with our certified counselors. So typically we're doing some listening on the same story I just told you and the story that you tell your listeners on why people got to where they are. There's always misconceptions that people are irresponsible. Most of the time, it's not that. Most of the time, it's some kind of change in life. How are they different? When you do a debt management program, you are paying your bank balance in full to your creditor, just at a lower interest, where bankruptcy, typically you're asking for forgiveness from the courts to relinquish those debts.
Now, how are you getting a lower interest rate, right? Like if I'm a bank, I'm not going to want to accept, 10% if I could get 26% from you. So like, how is it that the interest rate goes down?
Yes. So some of you've talked with Michael Bove of Debt Settlement. I saw that was one of your guests. So that brings up an interesting piece. Banks have risk tables, right? So if today's average interest rate is 24.95%, if you are in a high risk category, you typically are being charged today 29, 30, 31%. And usually your opportunities to get that rate reduced or get a loan to pay that off starts to minimize. So banks have, and this is, again, even in 1996 when we started the business, the NFCC, the National Foundation for Credit Counseling, has been in business for over 50 years. So the banks understand that there has to be an option for a consumer if they have lost their options to take out loans.
So less money is better than no money, or some sort of emergency is kind of the idea.
Yeah, and just to quickly frame it, a lot of it has to do with the view to shareholders on what good debt and bad debt are on the books.
Okay. So if I'm somebody who's struggling with debt and I call Cambridge Credit Counseling, what's going to happen?
So counseling is a position of empathy, right? When people call in, it's probably because they're at a position where they're either trying to learn what it's about or they've gotten to that point where it's time to seek some help and figure out options. So when we counsel people, we, again, listen to their story. And then the very, very first thing we do, Ben, is what people, the word they don't love is budget, right? We have actually tried to rename it a spending plan, right? I have money coming in and I'm going to spend it. And what am I spending it on?
I love that. That's a great reframe.
Yeah. So it's important that we see the picture of why the person's struggling, what they're looking for. And then we take a process of trying to figure out what's the direction that they can take.
Okay, got it. So you talked to me about what I'm spending, what my debts are, how much money I have left over. So after that conversation, how do you decide if this person is a good fit for a debt management plan?
Yeah. So when we do the counseling, we're asking pretty specific questions like, have you tried talking to your bank? Have you called your credit card company to get a reduced interest rate?
Is that a thing you can do?
They can, but that's the magic right there. When you start to get in high risk, the options close. So that's, for the consumer, that's the first problem. The second problem is if you called, let's say, Discover, and they were able to reduce your interest rate from 29 to 22%.
Sure.
That doesn't solve the problem of the other creditors you have, right? That's a short-term fix. And even 22%, if you follow those minimum payments, you're still going to pay for a very long time.
Yeah, that makes
with
a lot
of
sense.
money and interest.
That makes a lot of sense.
So we are really triaging at that point, asking the consumer what they've done. And what we've seen a lot of lately, Ben, and you may have too in the
Mhm.
customers that come through, is people, when the rates were low, took equity out of their home, paid credit cards off, the economy got
Yep.
bad, and now they have an equity loan and high interest rate credit
Yep.
cards, and then they're kind of stuck.
Yep. Yeah. No, definitely see a lot of that. So I go through this process. If I have no money left over, let's say like I make $2,000 a month, my expenses are $2,000 a month, we're bare minimum scraping by. Uh, what would you suggest for me in that instance?
The budget process is where we look for things that can be advised,
Okay.
right? Maybe there's some things that can be cut.
Hmm.
And sometimes we talk about crisis budgets a lot, where if things get worse, what's going to get paid first and what you're
Okay.
going to leave to not
Hmm.
get paid. So at that point, you know, usually people that are, have a little bit of money left over, the
Hmm.
typical formulation for the creditors is about 3% of their balances. So if it's
Hmm.
10,300 is what they're going to be paying out. So somewhere within that amount, we know that with the debt management program, their payment's going to be somewhere around 2 or 2.2%.
Okay.
So immediately there's a lower amount that would be going out.
Hmm.
Now let's just say it's the reverse of that.
Hmm.
The person's got upside down 600, and we've drilled through every single thing we can to try to
Hmm.
figure out a way to make it, and that doesn't exist.
Hmm.
That's where we start to say maybe it's time to talk to a bankruptcy attorney.
Yeah.
Maybe it's
Okay.
time,
Interesting.
if you filed for bankruptcy and you can't again, maybe debt settlement's an option.
Hmm.
That's kind of it. All depends on what
Okay.
the numbers say.
Got it. So when I call in, I'm talking to somebody that can help me figure that out, figure out how much money I have, and figure out if something like a debt management plan makes sense for me, or if I should potentially think about filing bankruptcy or try to settle the debt based on all
Correct.
of these circumstances. That sounds awesome. Like I wish I had had that when I had filed bankruptcy because I was just like up late at night, anxiously Googling, trying to figure out what the heck options I had. And I like to think I'm smart, but I'm not smart enough to figure that out. So I call in, I'm talking to an expert, it sounds like.
We know that's not true, first of all. Second of all, yeah, second of all,
I'll let you say it.
I want to make sure the listeners of the podcast understand the reason that our industry exists is because we are not selling anything.
Yep.
We're going through a process to try to figure out and narrow down options. If you
Mm,
don't, I can't tell you enough how people that wake up at night and don't know what they're going to do because they're stressing out, they're waiting to reach out, even just a counseling session where we can start dwindling down what's available and what's not available,
yep.
it just changes the mental health of the person, because
Yeah.
now we've checked things off that
Give
are
a
not an
sense.
option,
Yeah.
and we've really looked at, okay, these are the things, and now you have to make some choices.
Yeah, definitely. When Torres, I apologize. I clicked on your question and threw it up on the screen. We will answer it in a second. I want to ask Gordon one more question, then we'll get into some Q&A from the audience. So, who is it that I'm talking to when I call in to Cambridge, and why should I trust them?
Yeah, that's a great question. So we have certifications that we have to have in the industry, and 63 of our employees are cross-trained and certified to do debt counseling. And just to quickly say what a debt management program is so we don't run out of time, we combine payments into 1 month's payment. The person makes a payment to us. We distribute the payments to the
Mhm.
creditors. The benefits we get a lower payment, as I mentioned. The
Mhm.
average interest rate that we get is about 8% on
Oh,
those
wow.
accounts.
Well, how
And
does
then
that
if
compare
some,
to like a regular interest rate on average?
yeah, I mean, 24.95% is the average. So,
Oof.
you know, as
Okay.
interest rates went up in the mortgage industry, they did also in the credit cards.
Wow, that's an insane
One,
amount.
yeah, one other big benefit is if someone waited too long and they're a month or two behind, if they
Mhm.
are able to do the debt management program, most likely they can't make up the back payments and late fees. So one of the
Mhm.
benefits the creditor gives the consumer is after 2 or 3 good faith payments, they'll bring their account to a good standing without them having to make up the arrearages.
Wow, that's amazing.
Tremendous if someone doesn't want to go the other routes. If that's what they want to do, it's a tremendous benefit to help them get back on track.
So I'm talking to an expert in an organization that's certified. You guys are a nonprofit, I believe,
We are
correct?
a 501(c)(3) nonprofit.
Awesome.
Yep.
Yeah, there's a lot of I would say less than scrupulous organizations out there that try to get people into Chapter 13 bankruptcy, settlement, debt management plans, even you name it. One of the reasons that we at Upsolve love Cambridge is Jonathan, our CEO, and I went to visit them. and realized the entire time we were there that all they wanted to talk about was like things that indicated how trustworthy they were. They're like, here's all the work that we did to get into this. Here's the certifications we have. Here's how we've handled situations where we had, to work with the government to get certified. And I was like, man, usually when you talk to people, they're like, here's how much money I can make you, or how many like people I can help or whatever. And they're like, look at all of the crap that we had to do to get where we are. And I think it's
And
really
still do.
impressive.
Yeah.
Yeah. And still do to stay there.
Yep.
Love these guys. I think they do a great job. So, okay. So I talked to somebody at your organization, a credit counselor. We figure out, hey, I have enough money left to get into this debt management plan. I could knock my interest rates down from 24% to 8%. Sounds awesome to me. I sign up, then what?
So when a person makes their payment to us, we send out what's called proposals. They're documents that go to the creditors. And you'll see in articles all the time that we negotiate with creditors, and that is not true. These are policies that we have from the banks, probably 13 to 15,000 when it comes down to it, that we know what payment they need to accept the program. The reason we do a budget is because we have to show a need. So if somebody comes in and they have $5,000 left over, this is not, the debt management program is not for them, because they can probably call and get an interest rate reduction or a balance transfer or something like that.
They don't need
it's
it.
when the doors are closed, when it becomes a really great option.
Okay, got it. So when I'm making payments on this, who am I paying? Am I paying the bank at a lower rate? Am I paying Cambridge? How does this work?
The good news is that we make it convenient. So you're actually paying Cambridge, but we combine the payments into one monthly payment. So you pay us, and then we distribute the payments, and the consumer still gets the statement, just like they do on their own, showing the lower interest and the payments posting, so they can follow their success of paying the debt down.
Very cool. And how long does it usually take to get out of debt with a debt management plan?
The average projection when we first get someone going is about 44 to 48 months.
Okay.
But typically when people are budgeting and it helps them solve this problem for now, when they're doing better at tax time, they can put more money to it to pay it down even faster to accelerate that growth.
Yeah, it makes a lot of sense. Money, because money is money. If you have less of it going over here, there's more of it that can go over here, and that's something I see often as well.
Absolutely.
Okay, so question from the audience here. I typed it in the chat because for whatever reason my Instagram comments are not showing up in this chat. But how do I know if a debt management plan is right for me? Like, it's one thing for the credit counselors at Cambridge to know, right? And like say, like, go for this thing. How do I decide that it's right for me? Like, what are the kind of like emotional triggers or priorities that would make it right for me?
Excellent question. A couple things. 3 out of 4 people that do the free counseling leave with a budget and action plan. So we're going through a dialogue with them and trying to help them figure that out.
Okay.
Now, technically, what does that mean? If we talk about pay it on your own, do a debt management program, do debt settlement, or do bankruptcy. That's really, get a loan, a competitive loan. Maybe that's one of them, do it on your own. But the choice becomes, some people want to make sure that they make their payments. And if they come to the terms when they talk to us that they can't, at least they know I did the best I could. If it is a valuable option and they see that they can pay their balances in full, a couple of things to understand. Credit-wise, the drawbacks, if there are any of the program, is any accounts that you put in a debt management program are closed to get the benefit.
Okay.
So what happens there is when we talk to the consumer, they can handle an account or two on their own for emergency, business, travel, whatever that looks like, so that they can have some lines of credit to use while we're drilling down the majority of the debt. I get the question all the time. I want to bring it up so we cover it. How does that impact my FICO score?
Yeah.
So Ben, think about this. We're going through everything. Did you try the bank? Have you tried getting a personal loan? Do you have equity in your home? Once those are all no, people are already in danger with their credit score, right?
So my credit score might go down, but it might not matter because we're already, struggling.
Yeah, and here's the industry, because we've been in business so long, we've studied this tremendously as an industry. That the average FICO score drop when someone joins a debt management program is between 19 and 26 points. And after about 12 to 18 months of paying on time, you're actually better than you were when you came to us, which is the answer to the question is, why would I do this?
Yeah.
The reason you would do it is because if you want to just know that you're in a position where you have to get better, and that's going to look like 12 to 18 months, as long as you pay your payments on time, don't incur a lot more debt, continue on the path, you're just becoming a better candidate to lend to. And I'm not going to, I'm not saying similarly like bankruptcy, but one of the things that people don't understand about bankruptcy is when you start that fresh start, you can rebuild relatively quickly by doing some simple things, right? So bankruptcy, you usually, what is it, 6 or 12 months of you getting a secured credit card,
Yeah,
making payments on time,
not
running a
even
budget, putting
sometimes
money
not
in
even that
savings.
long. I got orders, like offers in the mail, like the day after. It was crazy. It was
What
like,
I
here,
mean.
how did you even know this is going on?
So a lot of times it comes down to, and this is what I don't like about a lot of the things that are offered
Hmm.
in the advertising realm.
Yep.
Oh, some places only tell you this is the one thing for you.
Yep.
Your
Yep.
application helps people triage and figure out, what
Yep.
am I eligible for?
Yep.
Our counselors, when we talk to a consumer, they help them figure out what are the options
Yep.
and what's best for me.
Yeah. I think Michael said this last week. If not, Michael, here you go. I'll put these words in your mouth. But if somebody only offers you one debt relief option, run because they're
That's
trying to
right.
sell you something.
100%.
Yeah.
And that's what we see on the airwaves and the radio today with credit repair and debt settlement, right? That's what
Hmm.
we see. And if I'm a consumer, if anybody takes one thing away from this today, it's make sure you go through what all of your options are.
Hmm.
And sometimes when we're talking to people and they're on that edge, it either becomes, you know what, I'm going to try it. In worst case scenario, I know bankruptcy is something I can look into,
Yep.
or go see an attorney or go to Upsolve, figure out
Mhm.
if you're eligible first. That doesn't mean you have to do it. Just know what's the options. What are they?
Yeah. Yeah. No, definitely recommend that. And Gordon mentioned it here, so I'll throw it up on the screen. But if you go to Upsolve's website, for those who don't know, and you click this Get Debt Help option, there's like a quick 5-minute questionnaire. Doesn't even take 5 minutes, honestly. That will tell you the relative fit of debt management or bankruptcy or settlement or counseling. If it's bankruptcy, we'll help you file that with our free TurboTax tool if you're eligible for our service. If it's debt management, we'll connect you with Cambridge. Settlement consolidation, we have other referral options. So can be a great resource to check between your options. So speaking of other options, Gordon, what other things does Cambridge help with other than DMPs? Do you have other services to help people get out of debt?
We sure do. So we are HUD certified to do housing counseling. We
Oh,
do
cool.
first time home buyer. We do reverse mortgage counseling.
Very cool.
In some states, we do foreclosure intervention
Mhm.
because obviously sometimes people run into trouble. We have an amazing program that we lifted up with a company called Credivolve, where if someone can't get a mortgage and it's because they have some collection bills, low FICO score, and they're not sure how to fix all of that, Freddie Mac actually built their underwriting guidelines into this platform. So our HUD certified coaches can work on a monthly basis with a consumer until they get to the milestone of being
That's
underwritten.
cool.
And the
Yeah.
reason it's awesome is because we're educating someone on what to do and what not to do. And more importantly, when you become a homeowner, what are those responsibilities?
Mm.
What does that look like financially?
Yeah, that's very cool. I love that because half the time you get somewhere, you find financial freedom, you achieve a milestone, and then you're like, well, what now? And that's a challenge. That's really cool
Yeah.
you guys do that.
And the last thing you want to do is get into a home and not really know what you're up against, right? So
Definitely.
sometimes things are for a right reason. If that's a godsend that you didn't get approved right away, maybe it's great that you're getting more prepared to take on that asset and that
Yeah.
investment.
Yeah. Hello, 2008. You get into a home you
Oh,
can't afford.
oh, I think I'm breaking out.
Cool. Question from Win Torres in the audience. Are there any incentives or rewards for completing a debt management plan? Win, I feel like you're always asking about the incentives. I love the way you think, man.
That's terrific. I think the best incentive that I can think of, and this is what I want to again say: if you look on your statements, and your creditors show you if you make the minimum payments, how much you'll pay in interest.
Hmm.
I'll give you an example. $15,000 at a 29% interest following the minimum payments would take 301 payments
Oof.
and $33,532 in interest. Whereas
Wow.
if you did that through Cambridge, because you couldn't pay more than the minimums, your payment would be lowered to 366, which would save you 147 a month. It'd take 48 months to pay it off, and the interest would only be 2,577. So the incentive is not to waste our hard-earned money. That's the
Yeah.
incentive.
What was that total savings? Like $300,000?
No, it was it's 33,000 versus 2,577. So let's just say 30,000.
Okay.
That's if you follow the minimums. And I'm glad that the creditors actually put that on the statements, because when we used to say to people, if you follow the minimums, it's going to take you approximately 25 to 30 years to pay it off. They'd be like, no, it
What?
won't. Now that there's a reason they were forced to put that on the
Yeah.
statements, because people needed to know if you just pay those minimums, yes, you're meeting your obligation, but your money mostly is going out the window.
Yeah, no, totally. And I always like to show people compound interest calculations, right? Because it's hard to understand sometimes, right? So
No doubt. I
if
do
you
them
took
in all my presentations. I have two forms. One, if you were to pay a constant payment at a
yeah,
certain rate, and then this is even just on your own, or one if you just follow the minimums. And everybody's like, oh my goodness.
yeah. Well, and that's just negative compounding. But then if you take those savings and you were to invest those on your own into even like a boring index fund, in 20 years, you'd have this much money. So like
I
that's
think we just put together a powerful incentive.
yeah, there you go, right? Like it's getting out of debt it's a it's a good incentive. Win is
No doubt.
happy.
We
Also, your
work hard
credit goes
for our
up.
money,
Yeah,
right? We
exactly.
work hard for our money.
Yep.
We
Make it
don't
work
want
for
it to
you.
be wasted, right?
Yeah. Make it work for you instead of as interest to the credit card companies for
That's right.
sure. All right. Some more questions here. So, what are the fees associated with a DMP?
Excellent question. I want to make sure we got covered here. So what this is all disclosed to the consumer in the counseling session by pro forma. So it gets sent out. The budget has to be signed off on. The plan has to be signed off on, and the fees are very simple.
Okay.
And these are all state-based fees. They make the structure for our industry, not our organization. So there's two fees. One's the initial fee that we charge to send those proposals that I spoke about earlier to get the benefits set up. That fee averages about $40.
Okay.
And then we're collecting payments, which has a cost to it. We have customer service, obviously, for when people have needs when they're on the program. So there's a monthly service fee that averages about $30. And that's all put in front of you so that when you see how many months, where the interest rate's going to go, what's the total savings, that's all disclosed to you before you make a decision to do it.
Okay. So I know everything. It's kind of like informed consent for doctors. I like that.
100%.
Okay. Another question here. Can I include medical or student loan debt in a debt management plan?
Yeah, so student loans, no, and here's why. It's kind of like secured debt. We can't get any benefits for anybody on student loans. Now,
Hmm.
we do, and we've counseled thousands of people on their student loans alone, and it's a free service. We do with a lot of teachers unions and public servants because they have access to true loan forgiveness.
Hmm.
So if you have student loans, feel free to give us a call. Be happy. It's a free service. They can tell you what your options are and what you're eligible for. Medical debt collection accounts are fine. Some personal loans work, and we'll go through that process. And actually, just so your viewers know, we pull credit reports when we do our counseling session, and they don't have it's not a hard pull, it's a soft pull to make sure
Nice.
that
Okay.
if we're going to advise you that everything is covered on the budget, because if we miss something when we're going through that budget, that could be the difference between a decision that you make on what you're going to do.
Gotcha. And speaking of calling Cambridge, we've just been yammering away on questions here. I want to throw their website up, cambridgecredit.org. There's their phone number right there. Free quotes for debt management plan. Gordon, if I call this number, am I talking to somebody that can help me right away, or do I get scheduled? How does that work?
Yeah, so that we have a intake center that sometimes people call that number, and we need to know where they need to go. Is it housing? Is it credit counseling? Is it student loan counseling? Is it bankruptcy counseling, which we also do? So they'll just quickly ask some questions and then get transferred to a counselor. And in some instances, when a person just is making a quick call and they really can't talk for long, we can just schedule an appointment and get them set up to talk to a counselor when it's best for them.
Very cool. And do you provide any educational resources? I'm teeing you up here beyond.
Yeah, if you could. So this is our My Money portal. And this is a abbreviated version of our education session that's right on our website. But what's great about this piece is there's lessons. So if you say to yourself, I just don't know why I spend my money, you can go to Psychology of Spending and you can take the course and then you go, oh man,
Cool.
that's why, right? Or saving and investing, or a bunch of categories
Very
we have
cool.
in there. But more importantly, this is a free portal that the education lessons are available for. And you can create, if you never talk to us, you can go in and create a guest account and make your own budget so that you can see what you have, what
Very
you're spending, what you have left over. And it's really a fun tool to just keep an eye on the money you're spending. The most important thing to all of our viewers, budgeting's not fun.
Nope.
It is definitely a process. It's a process. Look,
Yeah.
It's a process for our individuals. It's a process for businesses. It's a process for our government, right?
Yeah.
So we have to try to figure out in our household what we're doing, right? And that's the manifesto that we use to make that happen.
Hey, you said something earlier when we were chatting before we went live. You don't make budgets, you make spending plans.
Spending plans,
Spending
yes.
plans. Yes, I
Right.
love that. I don't
Yes.
know how many of you are familiar with Ramit Sethi, who's kind of like a budgeting guru right now. And his whole thing is like, you don't need to budget. You need to automate your expenses, and then you need to figure out how you can enjoy your money. And that's a spending plan. You get there, you figure out how much is left. We have one last question here from the audience, and then we'll wrap up. Can I still use my credit cards during a debt management program?
Excellent question. The answer is no, but you don't have to put everything on the program. The ones that are,
Okay.
the reason they're closed is because the creditor is giving you this benefit because your goals are to pay your debt down faster, right? And not
Mm,
pay them, not eventually, lose them
yep.
to collections. They want to help you because you reached out for the assistance. You can take an account or two, and the counselor will work through this with you on your own. So you pay them on your own. You can use them on your own. We recommend that you don't incur a lot of debt on them, but use them for what you need them for:
Okay.
emergency business travel, whatever that
Gotcha.
looks like.
Gotcha. All right, Gordon. Well, before we finish, what key takeaway would you like to leave people with?
I over the many years I've done a few different positions in this industry, in this company, and there is nothing better than taking action
Mm,
to invest in your wellness, right? If
agreed.
it's mental, that's one thing. If it's financial, it's another. What I can tell you is, though, if you have, or family members even that that they're kind of stuck,
Mm,
a counseling session is the best thing you can do, because we're
yeah.
not selling anything. We're just trying to tell you, hey, here's your options. Now it's narrowed down, and you'd be surprised just in the counseling session when you hang up the phone how much different you feel, because
Mm,
now you've actually gotten some
yep.
information, and now it's time to make some decisions on what we're going to do.
Yep.
And it's all about quality of life. Money can be our friend, and debt can be our enemy. The companies on this call today, Upsolve, Cambridge, we're here to help consumers in any way that we can in their financial path to get them to a place of financial wellness.
Well, that is a great segue. I was going to ask you where people should contact you, but since I have it all up on the screen, just tell me if I say anything wrong. Cambridge-credit.org. We have it here. We'll put it in the show notes.
That's
Check out
correct.
Cambridge's YouTube channel here as well.
That's our CEO right there that does some of the videos.
Chris, a
Yep.
champion bowler.
Oh,
Chris is.
yes,
He's
no doubt.
you don't meet many of them. Chris is one of them. Really, really good dude. Great advice here. The Financial Wellness Today podcasts. Um, Gordon is. It looks like you just did some new episodes of it. Nice.
Yeah.
Awesome. Anywhere else you would like people to reach out to you if they have some questions to ask?
You can certainly email me at goliver@cambridgecredit.org. I'm always
Ooh,
available. I do a lot of work with employers and member-based organizations to try to help employees in the workplace. So I'm always available. And if I don't do the counseling anymore, but I can certainly tell you where you belong, and I can certainly have a dialogue with you to try to help you in any way that I can.
amazing. Well, very rarely do people give out their direct email address for these things. So,
That's what
well,
we're here for.
he's the man. That's how you know you can trust him. Well, thanks, Gordon, for joining us. Super invaluable insights as always. I was expecting nothing less, but you definitely impress. Thanks to everybody who joined us. If you found this session helpful, check out more resources at upsolve.org. Shared our website earlier. It'll be in the show notes. Also, check out our YouTube channel at Upsolve. We release new webinars every Monday. Not going to do one next week because I am going to be gone. So unless I can find someone to stand in for me and freestyle, we won't have one next Monday night. So we'll see you in 2 Mondays. Check out our new video content. Just released a new video this morning on bankruptcy and student loan debt. A lot of people don't know this, but you can discharge it in bankruptcy sometimes, and Upsolve can help with that.
Mhm.
Stay tuned for future webinars, more interviews with experts like Gordon, and we will see you next time. Have a
Ben,
great
thanks for having me, man. I appreciate it.
Yeah, of course. Anytime, man. Gordon will be back against his will or otherwise. See you all soon. All right.